Market news now. The rand was flat in early trade as investors are cautious ahead of the central bank's policy decision tomorrow. The South African Reserve Bank is expected to raise interest rates for the last time in this cycle in anticipation of slower inflation. In terms of company news, JSE-listed poultry group Astral Foods expects its interim earnings to tumble 90% as the impact of unending load shedding and rising feed costs weigh on the company. Astral expects its poultry division to be hardest hit, saying that it will incur significant losses for the first half of its 2023 financial year, driven by feed input costs, which make up 70% of producing a broiler chicken. To talk to us about the latest when it comes to the markets, we are joined by Carmen Mpelwane, who's a portfolio manager at Sanlam Investments. Carmen, thank you so much for your time. What's your take on market sentiment right now and what's driving markets?
Yeah, I think it continues to be an overriding factor around concern of a recession. And there's definitely sort of a pause as we see China closed for the week as they have their festivities. And then add to that as well that we've had a bit of a mixed bag out of the US in terms of earnings. So market looking for a bit of direction, I think, at the moment.
So I mentioned in my intro some of the concerns coming out of Astral Foods in relation to load shedding. How much of a concern is it, especially when you look at some of these companies who've reported recently or at least given us trading updates in terms of the impact load shedding is having, especially on businesses?
Yeah, we've definitely seen an uptick in terms of number one concern. Lots of lost hours of trading in the last quarter in last year, and that's weighed on a lot of the stocks and companies going forward. As you've mentioned, Astral have indicated that they are concerned in terms of the way forward. They are looking to add some backup power. However, that comes at a cost. And if you are using generators, that comes at an additional cost to run those generators, which always puts pressure on costs and therefore margins for a lot of these companies. So as Astral has said, definitely concern around actually trying to reach break-even, number one, for them. But I think also, number two, food security in general for the South African consumers or population. So definitely going to be a lingering concern, especially considering Eskom's new announcement that we should see load shedding for the next 2 years consistently.
You mentioned a recession, and tomorrow we've got US fourth quarter GDP numbers coming out, and then the following week we also have the interest rate decision coming out of the Fed. The idea of a soft landing, where does it sit with you now in 2023?
It's such a difficult forecast to make at this point. We've been watching the inflation as well as the indication from the Fed around interest rates keenly. Having said that, I think the anomaly, and that's what's been throwing a lot of people off, that despite the fact we've seen the US retail numbers come off in December, which is what we've been hoping for when you have interest rates increasing, so to temper to ease the economy, what we are seeing is a labor market that remains quite strong. And that sort of put a spanner in the works in terms of the forecasting around the recession. Having said that, with such strong labor force and very, very low unemployment, could be an indicator that it'd be a softer landing than we would normally expect in a recession. But at present, more of a textbook sort of leading into a possible recession compared to the black swan events we've had over the last decade or so.
You mentioned that US earnings have been a bit of a mixed bag. What was mixed about them?
So it depended on which sector you were in. For example, we saw Microsoft come out yesterday. Initially, the market was quite happy with it. We saw the stock sort of boost. And then after the call, during the call at least, it came off marginally due to disappointment. Still waiting a bit eagerly for the retail stocks, but that'll come in early Feb around where they are. So lots of concern around whether the earnings and specifically the guidance in the various sectors will be continued to be cautionary. And that's why I say a bit of a mixed bag at this point.
The tech companies, or at least the top five, weigh about, say, 18% on the S&P 500. How important is it for you watching them, especially when they release their quarterly earnings?
Yeah, so most of the tech stocks have come out of a period of significant acceleration, specifically over the pandemic period. So what we are seeing now and what's been guided, as I've mentioned yesterday, Microsoft is at the end in a period of deceleration. So the key there is to see how management reacts to that. I expect there's likely to be some cost optimization or reduction. So definitely something to keep an eye out for at this point.
Just quickly, before I let you go, tomorrow we've got the Reserve Bank interest rate. Are you leaning towards 25 basis points or 50?
Depends on which side of me you ask, but I'm going to go with the 25 bips and hope that it stays at that level, be it probably for most of this year at least.
Carmen, thank you so much for your time. That is Carmen Mpelwane, who is from Sanlam Investments, giving us her perspective on the markets. And of course, tomorrow we've got that important MPC interest rate announcement at 3 p.m. and we'll keep it, we'll unpack it for you in greater detail. That is it for me. We're going to take a break. When we come back, Zinga Gunta will be with you until 3 p.m.